Hello, this is Cal with CustomInsured and my business partner, Dimmick Robertson, and this is our fourth episode where we address common pitfalls or how to maintain the best level of coverage for small business group health plans. In this particular episode, we'll be talking about how to lock in long-term renewal rates to where you don't see that 10-15% rate increase every single year where it becomes unsustainable and you're having to change plans year in and year out. So before we get started, Dimmick, anything you want to add?
Not necessarily. I would just say with the renewal rates and any small business that's had coverage for any amount of time has probably had to deal with this. Even in self-employed individuals and things like that. I mean, one of the biggest reasons that people, if not the reason that people end up shopping for coverage every single year is because they get that renewal notice in the mail and the premiums jumped up 20%. So last thing anyone wants to have to do is think about health insurance in the first place, let alone have to do this every year. So that's a big part of why we consider this to be a very strong element of our approach and our coverage, is that we can actually eliminate that annual headache of switching coverage.
Right. And, we're in the prime time of the season for, renewal rates to come due or for open enrollment. So we wanted to get this out there to for small businesses to see what viable options exist. So moving along, talking about how your risk is assessed or what they look at to determine what your coverage is. And we're going to look at SHOP plans or the Affordable Health Care Act versus private, and how you can have a combination of these two plans to bring harmony to your group plan where no employees are isolated or exposed for a large dollar out-of-pocket expense, and at the same time lowering everyone's premiums and giving them better coverage. So,
and just to be real clear, the traditional ACA SHOP plans, those are the ones that the vast majority of people are familiar with. Even the vast majority of people are using for their coverage. So just to give some real world relevance to that term.
Right. At the standard, or what would you say, 98+% of every plan out there is an ACA type plan, just because it was the standard up to January of 2019. It was actually forced coverage. You were penalized if you didn't have that type of coverage. Regulations changed and now there's other options available. So moving along, a traditional ACA plan, what makes them attractive for businesses is that there's no pre-existing conditions considered before you sign up the policy or before you sign everybody up. That doesn't mean it's not underwritten. It just means that it's not looked at before they sign up. However, after the first day of coverage, they're going to analyze every single claim that comes across the desk, and they're going to determine if that policy has become profitable or not. So if your claims exceed the amount of premiums coming in the door through a predetermined formula, they're going to raise your rates accordingly. So if someone in your small group of, say, 10 employees becomes sick, that means that we're going to have a big jump, or there's likely going to be a big jump in premiums the following year to accommodate that loss. So it's kind of like a stop and reset each and every year, and depending on the amount of claims that come in can determine what your future premium is.
Right. So another way to kind of encapsulate that is, again, as Cal mentioned, everybody can get coverage under these plans, which is good. And a lot of people consider that a valuable feature, which of course it is. But, the dirty or hidden secret is, just as Cal said as well, that they review them every year. So while everyone does get approved, everyone can get coverage on these plans, you'll be disproportionately penalized going forward because, again, they're going to be looking at the health claims for the past year. So that's something that, of course, nobody can control, no company can control, no individual can control. So you're always going to have that exposure every year of the insurance company looking at last year's claims and then, recalculating your new premium going forward.
Right. And then to add a third element to that, what that means is that if you're a smaller company, you're a lot more exposed because there's less employees, offsetting that risk moving forward, compared to a large company that can kind of drown those claims by the large amount of premium they're bringing in the door. Right.
And that's okay, yeah. But this goes back to the small business. Yeah, for large businesses, most, if not all, of these things that we talk about really don't apply, simply for that reason, because their pool and employee workforce is so large. They have buffers and things that can balance it out. But with the small businesses, again, which is really who we're focused on working with, this is a huge issue.
So the $1 million question is, how do you stabilize your premiums moving forward? How do you know what the best plan is for the long term, where your employees aren't having to change doctors year in, year out? They're not having to find different providers, etc. So now, a private plan works different than a traditional Affordable Health Care Act plan, whereas they assess the health up front, so claims are not a considered factor. So what that means is, once everyone's approved, it doesn't matter how many claims that individual has moving forward. It's not considered in their premiums year in, year out. So the only determining factor to increase the rates is going to be the older you get, or the closer you approach the age of 65.
So now with a plan like this, you get that modest increase because of age. Insurance, of course, is always going to be more. Health insurance is always going to be more expensive when you get older, but you mitigate against this big 20% jump. Now you just have very stable, traditionally 1 to 2% a year, so very stable premiums.
Right. So moving forward, what we try to do is we try to come in and speak to the small business and let them know that, you have different employees with different factors. We want to customize the plan revolving around what your employees' needs are, which brings us to the next slide, customizing the right plan for the right employee. Everyone has a different approach to what they need. You may have one family that wants to consider adding to their family, and they have youngsters, so vaccinations are very important. You may have older folks that have ongoing medical concern. Then, of course, you may have someone who's single, that's relatively healthy, never goes to the doctor, and only wants coverage in the event that there's an emergency. So finding the right balance per employee is very, very important. So what we try to do is we want to take away the element of trying to put a round peg through a square hole. When we started this conversation or this video, 98% of all plans out there are very generic plans. So the coverage is the same for everybody. The only real difference is what premium you're paying and what kind of a deductible do you have. That's the only difference between a bronze plan and, say, a platinum plan, is the deductible and the premium. So what we do is we customize it based on what your needs are. Someone who never goes to the doctor, who's in relatively very good health, is going to have a much different plan than someone that has an ongoing health conditions or needs to address pre-existing conditions. They're going to be approached differently, and the payouts and the claims are going to be differently. So we want to make sure we balance that accordingly.
Yeah, this all kind of ties into the approach that we take, is really based more on concepts of coverage versus a silver, a platinum, a bronze. When most people are shopping for plans, that's what they're encountering. Well, you have these three metallic levels. Well, what's the actual difference between those? There really isn't much. It's what the deductible is going to be, potentially what the max out of pocket, which that's an illusion, but that's something for another conversation. So there's really not a whole lot you can control with those. So we approach this with concepts. One concept being PPO coverage, giving people access to any doctor, any facility they want to go. Another concept that we pitch is very low or even no deductibles. So what we do is we build the coverage around these concepts, brick by brick, to give, as Cal had just said, the best coverage for each person. So that's a big part of how we do it, just because we kind of look at things a little bit differently. That's how we can kind of get away from this whole one size fits all format.
Right. So another way to look at that is, just like anything else in life, when you customize a solution, it's going to have a better result. It's more adaptable to what your current situation is. Now, this next bullet point here, ACA group health plans are designed to provide continuing coverage for an employee if they have ongoing medical concerns that they need treatment for. If you're not in that bucket, or if you don't have ongoing health concerns, then you're going to see likely 80+% of your claims coming out of pocket, and it's not sustainable. So what this means is, for someone who's in good to moderate health who never goes to the doctor, they're only going to be usually allotted one visit per year, which is like a preventative visit. Anything past that is going to be applied towards the deductible. A lot of these plans can have a deductible of $3,500 to all the way to say $6,000-7,000 plus. So what we try to do is customize that to take away that out-of-pocket expense, to where that person who never uses the coverage, many argue, what do I have this plan for? It's only covering 20% of my out-of-pocket expense. If I have an accident, I never use it otherwise, but I'm paying, tooth and nail with these price increases coming every single year. So that's the balance that we want to bring back. That's how you put the harmony back into everything, by taking the people who are, or the employees who are exposed in the system, and giving them relief while lowering your cost, thus customizing your solution.
And this goes back to something we talked about a bit on the last recording, the idea that in most situations, you really have a couple people in the workforce, or a couple of employees that are dictating the coverage for everybody. When you have a one-size-fits-all plan, you have to pick the plan that gives basically the best for everyone, or at least as close as you can get. So when you have these, maybe you have one employee that's, I'll just pick an example, but they're fighting cancer. So of course it's very important for them to have, good catastrophic coverage, coverage for that cancer. But what if the other, 5 or 6 people in the company are all young people that never go to the doctor? So hopefully that putting that kind of example forward starts to paint the picture a little bit about kind of the disconnect. A company's gonna, in that event, they're gonna buy a plan, that's going to be the best interest for that person with cancer, because they have the ongoing imminent need, but really kind of overlooking everyone else in the office. So everyone else is getting this plan that they probably never going to use, barring some catastrophic accident or something huge, but they're probably never going to use, and they're going to be paying, 30% more than they should. So that's where, we hear these stories of employees that just, turn down the company's coverage because, not because they don't want insurance, but because the plans being offered, really don't make sense for them.
Right. Again, it comes down to what kind of options do you have for the coverage. Are you in a one-dimensional plan where the only thing you can control is the level of your deductible or whatever premium you're paying? Outside of that, it's kind of up for grabs for 98% of small businesses out there, where you can find the right plan that works per employee. And so we may have a few different approaches depending on what we're seeing with the employees when we speak to them, and what their real needs are. But it's like Dimmick was saying earlier, it's revolving around these concepts to make sure everyone has the best catastrophic coverage moving forward. They have PPO access, and they limit their out-of-pocket expense while stabilizing their renewals. So this kind of leads into our next bullet point here. It's like Dimmick was saying, if the one person becomes sick catastrophically, let's just say they're fighting with melanoma, this is going to force everyone to accept that coverage, or that the coverage that they need. Now, granted, they do need that coverage, but everyone else is likely to be paying much higher premiums a year or 2 years later. The goal is to give that employee all the coverage they need, and then at the same time protect everyone else in case they become sick as well, or whatever, to address their needs. A perfect example of this is, for the lack of flexibility on the plans out there, is if you take, this is another example, by the way, we used on a previous show. If you have a 12-year-old male dependent, why are you paying for maternity coverage? You're never, ever going to need it, but it's still embedded in that policy. You can't take that part of the coverage out because it's not flexible. It's one-dimensional. So the only thing you can change is how much of an out-of-pocket expense you're going to have, or what kind of a deductible you're going to have, and what kind of premium you're going to pay. So we want to take away the coverage that they're not going to use and focus on what they will use moving forward to control costs.
Yeah, that's exactly right. So, with the one-size-fits-all plan, I know we keep saying it over and over, but inevitably, you're cramming it all together. This is a great example. A 12-year-old doesn't need pregnancy coverage. And so likewise, 12-year-olds don't need adult preventative benefits. 50-plus-year-olds, they don't need vaccination coverage. We talked about the younger people in our experience. Someone that's in their 20s and 30s, on average, never goes to the doctor. So, does someone in that age group really need 4, 5, 6, 7 doctor visits a year? Probably not. So why pay for that? So that's really the idea here is don't load up a bunch of just coverage that, only 1 or 2 people may need and the other people in the office don't need, and just throw away your money on that. It doesn't make sense.
Right. Another way to look at this is that we have several more arrows in our quiver than our competition does. So we can approach coverage many different directions while still maintaining that same status quo of giving the PPO coverage, of being able to lower or minimize the out-of-pocket expense, giving access to coverage that extend, past state lines, etc.
Stabilizing your premiums, which is what we're talking about.
Exactly. So with private employer health plans, they can be customized to address employee needs who don't need this ongoing treatment. Again, what about that healthy 25-year-old that only goes to the doctor when they get sick? Outside of that, there's no need. They're in perfect health. So if that person wants to make sure that if they have an accident, that they're not going to be exposed by $3,500, especially if they're paying hundreds of dollars per month for this coverage. And that's where we come in.
Yeah, I just, conceptually as well, pull out the whole, concept of health coverage, just from an insurance standpoint, simplistically speaking, if you were going to buy coverage that was designed and priced to guarantee it's going to pay for a claim, as opposed to buying coverage that's designed to cover you if something happens, naturally what's going to be more expensive? The coverage that's guaranteeing it's going to pay out a claim. So that's conceptually, that's kind of, how, in a very simplistic way, this works, is the mechanics of insurance itself.
Right. And the key is to balance that mix and match around the employee's needs, which we'll get to some percentages here in just a few minutes. So moving along here, when you give the right coverage to your employees, you can balance or offset that risk that a lot of small businesses are seeing. Again, these are very generic policies in nature. They cannot be amended. There is no give and take. There's only you get what you see, and all you can control is how much out-of-pocket expense and what kind of premium you have. So we want to go in there and present several different options for people. Another example, kind of to add on to that, if someone is sick and they have ongoing medical treatment, then we want to be able to give extra specialist visits. We want to be able to offset the copays. We want to make sure that the hospitalization kicks in to minimize the out-of-pocket exposure if something does happen and they become, incapacitated for whatever reason.
And we want to lower their deductible. If you have a catastrophic event or if you have ongoing health issues, good you have coverage. But if you have a $7,000 deductible on our plan, and you go in, well, you still got to come up with that 7,000. So yeah, it comes back to our concepts. Let's lower or eliminate that deductible, along with everything else that we're trying to do as well.
And there's a lot of truth to that, because most of these plans will not pay a penny until that deductible requirement is hit. So if they can't cough up that initial few $1,000s, which, let's face it, most employees out there are not able to do that, it's going to be very difficult to get that coverage to kick in. It's going to cause more complications, treatment gets backlogged, etc. So we want to avoid all those pitfalls. So what we've done
this is an important thing to bring up too, I think, is all these concepts and all these things we're talking about. I mean, these are all ongoing stresses, not only for the business but for the employees. There used to be a time when employees could be excited about their company's benefits. That's why they went to work for this company. But probably more often than not, what we're hearing is employees that hate their company coverage. This, because of all these reasons we're talking about. This is where their plans are going to, and it's kind of lost some of the sight of what all of this was originally intended to do, is to give your people superior benefits, to keep them happy, take care of them. And that chain is breaking with these plans, because now again people are having to weigh, is it even worth it to have this coverage? It's really, what is it even doing for me? So that's a big part of what we kind of incorporate into our discussion And to our approach is, hey, everything else aside, let's make sure your people are happy. Let's make sure that your place is a competitive place to work. And these are the way you do it, by having superior benefits your competition doesn't. Making your employees excited and happy again about what you're giving them as an employer.
That's another element I would argue is as important as a deductible. We have a couple of published pieces. I can't remember exactly which one it is, but we speak to that very same point. The number one benefit that an employee looks at before they choose an employer is what kind of health benefits are going to be extended. So a lot of people go in there and they hear this idea of being totally coverage. They're excited going through orientation. Then they have their first claim. They realize, wait a minute, I don't remember them ever saying I'm coming up with a $5,000 check right now. So it's a lot of frustration. And we hear that all the time talking to employers. And a lot of them, believe it or not, are pretty frustrated that we can offer solutions that they didn't know about. And a lot of it had nothing to do with anyone's fault, just because of a change of regulation that happened in January of 2019. So going back to what our solutions are, we try to categorize employees in one of two different buckets, so to speak. The first one is coverage designed to embrace ongoing medical treatment. So if someone may be a diabetic, or if someone has ongoing treatment that they receive, whether it's monthly or quarterly or semi-annually, we want to be able to ensure that they're going to keep that same status quo moving forward. That this also applies to pregnancy coverage. If someone wants to extend extend family planning, we want to keep them in this bucket and give them the extra coverage they need, as it's ongoing. Now, if that changes down the road, we can make adjustments down the road, but initially we want to give the coverage that they need at that time. And when things change, we can adjust. And then
And I think you're going to show the image here in a moment as well. But I was going to say, for those that are listening closely, you might pick up on the fact that these examples and the people in this group, so to speak, or in this subset of the group, it tends to be the minority. In our experience, 10 to 15% that really fall into the category. Again, these are averages we're talking about, but on average, it's about 10 to 15% of the workforce that has what we're referring to as ongoing and/or pregnancy needs. These are the people. Like some examples, we've used are cancer, major surgeries recently, or things that they're going through right now. This is, again, a small portion of the group, but these are the people that are dictating the plans that everybody else is getting on these traditional, or the coverage, I should say. These are the people that are dictating the coverage that everyone else is getting in their office,
right,
for better or worse.
Right. So taking that or moving forward with option number 2, this coverage designed, to eliminate the out-of-pocket expense for those who are in good to moderate health. Okay, and focusing on what might be coming around the corner, or random events like accidents. The premiums for these options are much more attractive. And as we addressed earlier, you can either assess the risk after the coverage starts, or you can assess the risk before you walk in the door. On group health option 2, we take a snapshot of the health history and really look at what kind of prescription drugs they've had in the past, and then make a determination from there. Now, like Dimmick was saying, that's the minority are those with pre-existing conditions. However, everyone deserves right to health care. We don't ever want to leave anyone behind. What kind of message we're trying to convey is, why are all the people in that type of coverage? They don't need or require that kind of coverage, which is inflating the premiums, which is causing much more out of pocket than what they need to have. So the ones that don't have pre-existing conditions, we can put them into a more customized approach designed to eliminate the out-of-pocket expense moving forward, and that lowers the premiums of the group health plan, which in turn, allows the employer to offer even additional coverage while saving money to those with pre-existing conditions. So there's many different ways to approach this to offset those costs and make sure everyone has the right plan. Okay,
Well,
so
it's something that's probably important to note at this point. By taking this approach, for the most part, when we're working with businesses, this approach is usually going to chop 20 to 25% off of their monthly premium. Again, this is an average, but across the businesses that we've worked with using this approach, that's typically about what you're going to see, about 20 to 25% premium reduction. And then again, going back to the message of this webinar, stabilize renewal premiums going forward. So coverage you can keep in place. We have clients that have had their plans 5, 6, 7, 10 years. As long as they are happy with the coverage, or even if they want to make changes, we can adjust at any time. But as long as they want to keep these plans in place, that's part of the beauty of this. You can turn it on and just forget about it going forward. Not something you have to worry about anymore.
right. So when a company adopts this philosophy and they, customize the plan that revolves around their employees, are the employees of the pre-existing conditions, they're likely to have premium increases, each year moving forward. However, if it's only 20% of the pool, it's going to get drowned out where you can maintain that stable premium moving forward, as opposed to everyone in the company jumping up 20%. That's a difference of several $1,000s over just a couple of years in monthly premium, while they get to keep their long-term interests or long-term doctors without having to change plans month in, month out. So that's what we want. That's the element that we want to bring to the table, is the flexibility and the adaptation of what their employees need, not forcing everyone into one box or trying to put that square peg in a round hole.
Yeah, and that's exactly right. I think that's a perfect term. The coverage built around the employees. I think that really kind of says it all. Instead of shoving everyone in to one box that most people are not going to fit into, let's customize this and let's give everybody better coverage and give the business a better deal while they're at it.
To see more about what we do or what kind of pricing we have, feel free to go to our website, CustomInsured.com. And there's a link there for a free quote. You can put in some basic information. We can show you 3 different plans, our 3 most popular plans, to compare what you have. We're just going to ask for the employee's age and whatever dependents they have moving forward, and it'll kick out a number at the end. And then once you see what that pricing is, we'd like to be able to speak with you if we're in budget, but we want to put our best foot forward and show you what we can do.
Yeah, and on a separate note, for those of you that value any education or content, as you're listening to here, this is obviously a little bit more of a longer and in-depth version of a topic, but we have several podcasts. Feel free to search this out, Custom Insured Podcast, where we do, those are of course much shorter, 3, 4, 5 minutes. We try to cover as many topics as we can think of, and we're always looking for feedback of more. But things such as what we're talking about here, or PPO networks or Medical Information Bureau, most common asked questions. So again, for those of you that have interest or may want to know more, just health insurance and things like that, check out our podcast. There's a bunch of them out there.
And one last thing I want to add is a free gift for listening to this video. If you click on the link before, you're more than likely watching this video through LinkedIn. So if you click on that link below, it's going to give you a CRM form. It's going to kind of give you more of a breakdown about how to control your renewal rates moving forward, and some different elements that make this all more relatable about how to control your costs moving forward. So guys, when the time is right, please think of us. We have several different mediums of education, like Dimmick said, from videos to podcasts to video podcasts. We have all kinds of different PDFs and freebies and downloads that we offer out there. So thank you for listening, and make sure to tune in. We'll have several more of these video podcasts moving forward.
Just thanks as always, and we appreciate you listening, folks.
Take care, guys. Stay safe.